Morning, this is Tom Alexander. It is Saturday, December 17th. It is 9:33 a.m. Eastern Time in beautiful Charleston, South Carolina. And this is the weekend video report that accompanies the written report. In last week's report, both the video and the written report, I posited that the structural condition as well as the technical condition of the market suggested a very bearish week, and we got that. Now, what I could not have foreseen is the path that it took, and it was a rather wild ride. But what we have now is we have selling tails in market profile parlance, and we have 3 consecutive down days, pretty significant down days since that rather dramatic Tuesday reversal. Now, let's take a look at the charts. By the way, if you're not receiving the written report and you wish to receive it, please send me an email to tom@alexandertrading.com and I'll put you on the report. Also, if you find value in the videos, please like the video. It's very helpful in terms of search engine stuff. And also, if you'll post comments, any comments you may have, and I'll always respond to questions in the comment section. Okay, let's take a look at the charts. Okay, what I have outlined here in red, this is the dramatic rally that began at the close on the 9th and carried into the close on the 10th. And then the 10th proved to be the proverbial stopping price again in market profile parlance, from where we rotated around up and down and chopped and churned and formed this very two-sided trade that culminated in last Tuesday's dramatic reversal again on Fed news. So we're down 3 consecutive days. You're sort of pushing the envelope now when you get into 4 or 5 consecutive down days, even in strong bear legs. Also, in the Russell, we have taken out now. Didn't close below it, but we took out the low of the night. I consider this to be a bearish event. Now, we have not reached the same levels in the NDX, the SPX, or the Dow. The Dow came fairly close. Could we rally here back up into this range? Absolutely. We're sort of at odds from a technical situation and a seasonal situation right now. Seasonally, this can be a very strong time of year. Technically, there's a lot of reason to believe that we're nowhere near even a short-term low. And if you look at the levels on this chart, here are the downside levels. Where we have closed now, we're sort of in the abyss. We're in the middle of nowhere. There's no quote-unquote potential support from an auction market perspective. I do not use magic numbers. I use previous trade. I use price action because I believe that the market itself is the best arbiter of what might constitute support or resistance. And we're basically in an elevator shaft to the downside now in all of the indices. Even though the Russell has taken this out and bounced a little bit, if it takes out Friday's low, there's really nothing of significance until the October lows. Now, I'm not predicting that's going to happen. I don't think it would happen in a straight line if it were to happen. So let's take a look at the technical situation. Okay, this is breadth. This is New York Stock Exchange advancing and declining issues. Very simple. The red is a 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of advancing issues. And in the lower pane here is just breadth. NYSE closing breadth readings. Now, if you look, in every single instance, in the bear legs down off of the January high following rallies, we've had multiple readings of negative 2,000 breadth readings. I also said several weeks ago that the rally would not end, or a signal that the rally had ended would be when we saw that initial 2,000 breadth reading. Well, that occurred on the 5th of December. And you can see that this is when it occurred initially off the top. This is when it occurred following this rally. This is when it occurred initially following this rally, etc., all the way down. Now, what has not occurred is we have not had another negative 2000 breadth reading. So for that reason, I am suspicious of any rally that occurs short term prior to us having a negative 2000 breadth reading. It would just be very unusual. Anything can happen, as last week taught us, but I am not looking for even a short-term low, anything other than just a minor, very minor low, unless and until that happens. Okay, another piece of the technical picture that I think goes on the bearish side of the equation is VIX. So we got down into this 20 level, barely in, on a few days in this rally. And then we started higher, and we have remained above the 20 level in VIX since the top. As long as VIX is above 20, and in particular, VIX is increasing, then I would expect lower prices. I would frankly not be looking for a low until we see something in the neighborhood of 30 VIX. And if we reach a 30 VIX, we're going to go lower before we make any significant attempt at a rally. And if, on the other hand, we suddenly stop on a dime, we begin trading higher, VIX drops below 20, then you have to respect that. Then that would suggest that there's further rally to go. Okay, that's pretty much it for this week. Christmas is next weekend. Merry Christmas, by the way. Next week will be low volume. That doesn't mean it can't be high volatility. I can point to the decline in December 2018 into New Year, Christmas Eve. That was a very sharp decline. So just because we have typically a low volume week in front of Christmas does not mean we won't have wide range movement or volatility. And the low volume increases the likelihood of this air pocket stuff intraday, where you get these out of the blue 15, 20 handle rallies and or declines that stop on a dime and reverse. You guys have a wonderful week. Have a Merry Christmas, and I will speak with you again in a week.